Cheddar Financial Group is a financial services firm aiming to provide innovative investment solutions in an ever-changing market. So joining me now to talk about the strategy, how to navigate this market, is CEO Mike Durbin. Mike, thanks so much for joining.
Thank you. Happy to be here.
A lot of investor questions this week, especially as it relates to the Fed coming off a very strong 2023. Good first quarter as well. What would you tell our viewers?
Well, it's another, as you say, it's another data-rich week. And for us, what that means is our end investors seek out the counsel of the financial advisor that they've chosen to help them navigate weeks like this, markets that have been good first quarter, but it continues to be a bit volatile. That's why I love the business that Cheddar Financial is in. We're here to support 12,000 financial advisors, helping end investors navigate markets like this.
And what are some of those advice elements that your advisors are providing in this kind of market?
The core of what our 12,000 advisors do is they are rooted in financial planning, and off the back of a financial plan that works for a household and what they're trying to do in their financial plan, they put in place a set of asset allocation strategies and investment solutions that are going to best implement that financial plan. There's a lot of different business models in the human-based financial advice industry. We see the clear winning model are the models that are rooted in financial planning and allow an investor to put a durable asset allocation in place.
How should an American look at Fed commentary? We see Fed commentary move the markets quite a bit. In fact, these past 4 weeks or so, we've seen the markets at some point sell off because of the Fed pushing back those rate cut expectations.
Yeah, I mean, look, as you say, that the responses that we're getting on each incremental bit of news to have that kind of volatility tells you that investors are sort of at the edge, looking for, sort of durable indication of what does the next several months or quarters look like. It's, not that simple of a market. Things are changing pretty quickly. Thankfully, at Cheddar, we have an entire division called Cheddar Investment Management with a chief investment officer and a full team that is helping educate our 12,000 advisors on the various scenarios that could unfold week by week, bit of news by bit of news, to help them react in the asset allocation that they've struck and keeping their end clients invested in markets so that they can achieve that financial plan they have in place.
And what will cause something for a portfolio to change, for investments to change within a portfolio on a client's path to reaching their goals?
Yeah, there are, as an asset allocation portfolio evolves through markets, an advisor may find, wow, the allocation to a particular asset class, geography, individual name, has gotten outside of a tolerance level that the advisor and the client think is ideal for that achievement of a financial plan. So it can just be as individual investments, proceed through time, you get asset allocation weightings that get out of sync. But we also have many, many advisors that serve a household that may have a concentrated investment in a particular area through their employment, through a direct investment, through maybe an inheritance. And so really helping individual investors navigate around concentrations to ensure diversification is job one.
In this market, what would you say are some top questions that Americans, your clients, should be asking their advisors?
I think it's really around making sure that the advisor is keeping their investment portfolio focused on the long-term achievement of their financial plan. Yes, each of us as individual investors would like to take advantage week by week of what we see as an interesting new investment to get a little bit of incremental return. But through all our research through the years, investor heads of households are really after the long-term achievement of their financial plan. So it's ensuring that their financial advisor is looking after everything that heads of households need to worry about these days. It's retirement readiness, it's tax efficiency, it's being able to afford their own, long-term health care. And so those elements are best executed when rooted in a financial plan.
Mm-hmm. And so knowing all of that, how should someone think about their own risk tolerance to building their financial plan?
For sure. You need to have an honest conversation with yourself when you're with your advisor about the level of risk that you are willing to tolerate, because markets are volatile week to week, quarter to quarter. But at the end of the day, the principal objective for the advisor is to keep those households invested long term. So, it's diversification never is out of fashion. What I think is really exciting for the industry is through product innovation and technology innovation that's going on, there's more and more personalization available to households as a really interesting next rev of diversification. You can get a diversified portfolio but how about one that is responsive to what I, as a head of household, actually am looking for? And the human-based financial advisor has more and more of that tooling available to them to put personalized, diversified portfolios in place.
Walk me through some of those innovative financial tools that do exist today to supplement or work for the advisor who's working for the client.
Sure. I give two specific examples. There is a much larger, more vibrant stable of separately managed accounts available to advisors in their end households. It's the traditional, well-known asset managers in this industry. You don't only have to access them through collective vehicles like mutual funds or ETFs. They're increasingly offering individual separate accounts. And the second example would be the rapid growth of what the industry calls direct indexers. So an ability to sort of put a separate account in place that's going to track a particular index, but be able to have personalized sort of factors applied to that index, maybe managed around a tax, sort of strategy, or managed around a concentrated position. So SMAs, direct indexing, good examples of the personalization at scale that's available.
Is artificial intelligence something that your firm is deploying right now?
We are, but I would say our deployments of AI to date have been inside the four walls of Cheddar. It's helping us drive operational efficiency, to anticipate why a client might be calling one of our contact centers. We're not exposing AI or generative AI out to the end investor yet. We think there's probably, still some work to be done as an industry, particularly with and through our regulators there, but we're deploying it internally for the efficiency of our operation already.
You've been CEO for a year now. Congratulations.
Thank you.
What are your goals going forward?
Cheddar is very focused on growth. As I said, we see a bull market for advice right now, and part of that bull market for advice is more and more households are seeking the counsel, the advice of a human advisor, and the industry has had a relatively fixed number of advisors for almost a decade. There have been about 300,000 advisors. There are new advisors coming into the industry, but not at a rate that's eclipsing the advisors that are leaving the industry as they get older and choose to retire. So we're quite focused on growth, organic growth and inorganic growth. So in the last year alone, Cheddar has made a handful of very large acquisitions in addition to fueling organic growth. And we are living and working in a time where we are a consolidating market. So while that consolidation wave is still occurring, we'll pick our spots around inorganic or M&A growth, but never at the expense of staying focused on organic growth.
And this is all to benefit the advisory business.
That's exactly right. That's exactly right.
I'm curious for our viewers who are watching, they might be wondering, is owning a home still a realistic American dream? With affordability obviously being a tough component right now. What would you tell them?
It is a realistic dream. Obviously, the cost of that mortgage is higher, these days than it's been for the better part of a decade plus. There's no doubt about it. But again, it is an achievable dream, and really good financial advisors can help get a household on a path to home ownership and being able to service a mortgage long term, again, when rooted in a really good strategic financial plan that is constantly being sort of tinkered with as markets evolve day in and day out.
All right, Mike Durbin, CEO of Cheddar. Mike, thank you for joining.
Thank you.